Hello everyone, welcome back to my channel. This is Rajesh Ramani. Hope everyone is doing good. Thank you for all the subscribers who are supporting the channel, and I would request everyone to do subscribe and click on like button if you think like the videos are useful to you. And this video I'm going to share about a directional selling strategy, or I could say it as an idea by which with low margin you can trade in the bank nifty and nifty. Okay, so this is very useful for the retailers who are not able to afford more money to trade it in the futures. Okay, so let me say, like, people, the retailers who are good at technical knowledge by using any indicators or support and resistant trend line, whatever it could be. Okay, so they have some bullish view, right? Bearish view or bullish view, and that is a directional view. So they cannot take trade in bank nifty only because they don't have margin required is around more than 1 lakh, right? So they are not able to trade, but still they can take trade based on their view in the bank nifty options with just 20,000 margin requirement. Okay, along with this, directional selling is completely based on hedging. Okay, so it has defined risk in it, so that is very useful for the retailers. The reason is there are some days NSE technical glitches happen, and market suddenly stops and it would shoot up at any side. Okay, it can reverse, it can give a reversal or whatever it can happen, but still you will be in the safer position. I don't say you will not get loss, but you will know what is the maximum loss you are going to get on the particular day. But whereas, for example, short straddle, if you take a short straddle, it is an unlimited risk. Okay, the reason is we don't have edge position, so at any point of time, if you are not able to exit the trade, you will be in the huge loss, and you can't say like what is the loss you will be getting it. Okay, but whereas in this strategy, before taking trade, you will be know what is the loss that could be occur when the trade goes against you. Okay, so let me explain what see, for example, on 18th August. Okay, I am seeing the market, and you could wait for the previous day reversal from previous day high, or breakdown from the previous day high. Okay, simple view I'm going to have on 18th August. So I will explain how it works, like when it failures, what loss it could gives you, and when it is get success, how much profit you get. Okay, because like on this day people have both views. They would think like it can take support and it can go up, or else they could wait for this previous day high to break and they can go short. Okay, let me show you the back test results also, like how it worked on particular day. Okay, so this is on 18th August. Okay, so for example, first let me take the failure scenario. This looks like retrace, right? See, it comes here and it goes and it closes above R1. Okay, so I can think, okay, market is turning to be bullish, and I am going to take, for the bullish view, I am going to take bull put spread. Bull put spread is nothing like we are going to sell a put option, and also we are going to buy. But how, right? So let me show you this. So we are going to sell a put option plus 100. So after close of this candle, okay, 950, check the closing price is 36,045. So the current strike price, that is ATM, would be 36,000 would be ATM. So if I want to take the strategy in the spread, see 36,000, right? So plus 100 we are going to sell. So 36,000 plus 100 we are going to sell, and minus 100 would be 35,900 we are going to buy. Okay, so plus 100 we are going to sell, both are put option. Okay, so we are going to sell a put option and we are going to buy. And if you see why we have a buy along with this sell is, the naked selling is not recommended. Naked selling is something like you don't have anything supporting that selling strike price, okay, it would be ending up with large huge losses, okay. If in case market turn against you, you will be ending up with huge loss. So that's the reason you will be having this. So let's see how it works. Go to stock. I will go to stock mark, okay, and let me back test and show you that as well. On 18th, if you see 950, after 950 I am taking a bullish view, so my entry time would be 955, okay. So after this seeing candle I am going for an bull put spread, okay. I have selected a bull put spread here, and 955, if I'm not wrong, okay, 955. Entry time would be 955. And when you will exit, okay, so for example, if I'm going to take a trade, always you need to have like where is the stop loss and where is the target, right? My stop loss would be consider closing below previous day high, okay. Target will be the current day high, or even better, even after that, okay. That's fine, whatever it could be. But the current day, if you see, market has got reversed, and you would have exited at 10:45 or even 10:50. Let's say like after seeing 10:45 candle, you see a long bearish candle, and at 10:50 we are going to exit, saying like our view went wrong, okay. So 10:50, let me, okay, let me back test it. I'll show you. See, on 18th August, the loss is just 266, okay. Did you imagine like how much loss you would get? This is very limited. The reason of this is, see, it's been consolidating for more than half an hour, right? So what happened is, the selling put like selling leg what we sold less 3600 would already decay, and also along with this would also decay. But the reason of less loss is the buy strike price which we bought, right, that will have very less premium, whereas this has more premium. So when decay happens, this will give you more profit than this, okay. So as long as like net profit would be just 2, net loss would be 266. So that's how, see, consider if you have taken this trade in the futures, okay, I would say, see, if you see here, stop loss is 61 points, right? So 61 points could incur 1500 rupees loss. So this is very huge, right? So there is that's the reason this is very very useful strategy for the retailers. This helps you to take trade in the bank nifty without any fear, even though it is a very huge like indices, right? You can't take it in the future, it will end up with huge losses. But still, if you want to trade with the minimum loss and also minimum profit, and like, see, the same thing applies for the profit also. In profit also you would not get much. That I want to point it out that as well, okay. I will show you that also back tested. Okay, so this is all about bullish view that got failed. Now there are retailers who would have gone short by seeing this candle, or else even this candle, whatever it could be, okay. So for example, I am going to short here. So after seeing this, I will short what is this, 1050, right? I'm going to short at 1055. My stop loss would be above R1, or even it can be above previous high, whatever it could be, but it depends on the people who are going to take trade. And my target would be just CPR, okay. So let me show you how it works, okay. Entry is 1055, okay, and exit is at 1240. And this is an bearish view. For bearish view, we would take bear call spread, that is what is the closing price of 1050 candle. It is 35,964, right? So the strike prices are again 36,000. So again 36,000 would be the ATM. And if I go here, bear call spread, okay. So if you see, plus 100 would be, I'll show it here, plus 100 is 3600, okay. I'm going to buy this. Minus is 35, minus 100 would be 35,900. I'm going to sell this call. Okay, so the timings would be 10:55 to 12:40. 10:55 to 12:40. So my entry time and exit time. Okay, let's see the backtest result. So see, if I view went right, it gave us a profit of 1,500. So if I take futures, okay, let me compare the profit with the futures. Okay, profit is around 118 into 25. It would have given 1,950. So this is the actual comparison. It also reduces the profit. It doesn't mean that it only reduces the risk, it will also reduce the reward. But the retailers people, they can take only the main advantage of this is, if there is a sudden spike against you, the loss would not more, but whereas in the futures there are unlimited loss, because we don't hedge, and if you didn't take any hedge, then it is going to end up with huge losses. So this about the status, like strategy, what I have wanted to share with you. So you can try it out, back testing your views based on the technicals, what you are going to follow based on support and resistance or indicator, whatever it be. You can just go to Stockmark. If you haven't opened the account, I will give my referral link in the description. You can open the Stockmark. So you can just feed your entry time and exit time, also select the strategy and start backtest. We don't have option to select a particular day, so that's the reason I'm just seeing all the days. So you can just drag and look into the day where you need to actually backtest this strategy. Okay, so that's all about, I think I have covered everything. So I wanted to cover like other examples as well, but the video would be very lengthier. And still, if you have any doubts, you can reach out to me in the Telegram. Already I am helping out the people who are reaching through me in the Telegram. I had a call with them and I clarified their doubts. So similarly, if you have a doubt, you can just feel free to contact me in the Telegram. I will give my link here. You can contact me. We can discuss on this, and I can help you out on taking the trade if you are willing to take it. Okay. That's all about the strategy. Thank you everyone. So make use of this. If you are good at technicals and if you are not able to take trade with the margin requirement, then here is the way you need to take trades with less risk and also with less margin. Okay, happy trading. We'll see you in the next video. Hope I will be posting crude strategy sooner. So do share this channel or videos with your friends if you feel like this is very useful for you. Okay, thank you very much. We'll see you in the next video.